Hello and welcome to financialexpress.com. I'm Shaleen Agrawal. We have with us Nithin Kamath, founder and CEO of Zerodha. Nithin, thank you so much for joining us.
Thanks, Shaleen, for having me on this.
From a new firm to India's largest broking service in just 10, 11 years. How did you do it?
With a lot of luck, So, no, I think, looking back, we were at the right place, right time a bunch of times. I think we started off at a time when most competition was kind of diversifying. So we kind of got lucky in a way. Around 2013 is when, Kailash joined us, and our tech journey started. So, there also, we are kind of ahead of the time in terms of, starting with tech itself, in-house tech and all of that. And then Aadhaar happened in 2016. So, you could now onboard customers online versus, doing it physically, which is to be a 40-page documents, etc. So I think the biggest tipping point for us was that, in the journey. And then COVID happened in the sense, like suddenly, a lot of people who are probably sitting on the fence, deciding if they should invest, not invest, suddenly had more time on their hands. They had, maybe more savings because they're not spending as much. And, they invested in the markets, also kind of bounced back very quickly. So I guess, all of those together was like a potent combination. And suddenly, you had a lot of new customers join. And in all of these different tipping points, we were kind of ready with the right product around the same time, be it our in-house trading apps, be it our education platform, be it our direct mutual fund platform, or be it, all the startup partnerships through our Rainmatter initiative, right? So at different points of time when we were at the tipping point, we also had the right products and initiatives. So kind of, it's helped us, grow quite a bit, especially in the last 2-3 years.
Back in early 2010s, did you have that kind of ambition or the plan to grow so big, or did it just happen?
No, I mean, we didn't have any ambitious plan. Even today, when people ask me, I say, get up every day, you try to do something better in the business, and how much ever you have to grow, you will grow types. So I mean, that's generally been the philosophy right from the start. And especially when we started, the focus was very active traders and not investors. So the best case outcome for us was not more than 100,000 customers. So it's it's kind of turned out into something very different to what we had originally envisaged.
That's a very interesting point. Very active traders versus investors. So on a broking platform, purely from user experience point of view or user features available to user point of view, what does it entail to service an active trader versus an investor?
Yeah, so this was really the biggest challenge we had as a business when we, put out our first in-house product, Kite, our web and mobile app, which was how do you kind of cater to beginners as well as the most experienced, like active traders. So typically the beginners are looking at, it being very simple to understand. So it is very, I think what people would prefer is, a minimalistic kind of experience and, without too much of complexities. But a very active trader wants all the bells and whistles, right? I mean, you want charts, you want, option tools, you want back testing, you want all of this. So, so for us, the challenge was that, how do you keep it simple, but yes, it offer all the bells and whistles. And it was a very conscious choice that we made that we're not going to have multiple platforms because, when you have multiple platforms, multiple trading platforms, what happens is, your focus kind of goes around. So we said Kite is going to be a flagship trading product. And we will try to incorporate everything within this, whatever we think is required for an active trader and as well as an investor. All the adjacencies, what we did was we partnered with startups, so Small Case, Streak, Sensible, LearnApp. I mean, there are like 20 plus startups who are part of the Rainmatter kind of, initiative. So we created like an adjacency kind of experience. So it's like that strategy has kind of played out well because today Kite caters to both beginner investors and a lot of very active traders, and both seem to be quite happy. Now for the beginner investors, we could be more simpler, but we have this the fact that we also have to cater to active traders, which probably makes it a little complex for people who are just starting off trading or investing in the markets. But that's a compromise, we are okay to live with.
the features that are made available to active traders, such as you said, charts and backtesting and everything else, shouldn't those actually be premium features and paid for?
So yes, so some of them are actually, some of them aren't, so the way the startups who are built on top of us, they've done is, they all offer a certain basic, it's like a freemium types, so there is a free offering plus, but people who want to do more kind of pay them whatever fees. Like charting is free, of course, I mean, there is nothing, but our option platform, which is a partnership with Sensible, or, like the backtesting with Streak, or, even like this investing in portfolios using small case, I mean, these are all like a freemium kind of a feature, so.
I'll just stick around on this for just one more minute. So, like Sensible, you have a very good partnership with them, but have you ever thought of having that in-house within Kite itself?
Right. No, so this is something that, back in 2016 when we started Rainmatter. So this is something we kind of made peace with. See, the thing is, the core trading platform, the core trading business is extremely complex. I think in financial services, broking is a lot more technologically complex, a lot more than banking itself, because a banking platform goes down, you can always say after 1 hour come back. We can't do stuff like that, right? As in, like today we place between 10 to 15 million orders a day in a 6-hour window, and each order carries a risk along with it. So it's a very complex business, and so we said we're going to focus on the core aspect and partner and collaborate, right? And I think, in today's world, collaboration is really the key. I mean, unless you're, of course, Apple, Google, or whatever, right? As in, otherwise, I think, if you're a younger company, I think instead of trying to build everything in-house, I think the better option is to collaborate, because there's a lot of power synergies that come in. If you find the right partners, of course, and we've been very lucky through Rainmatter to have found the right kind of partners with whom we can collaborate. Of course, all of these partnerships that we have, we could have built in-house. But if we had all built it in-house, I think it wouldn't have gotten as much love and focus as these own teams have given them, right? Because for us, it would have been another small thing within, the ecosystem of sorts, So, and I think it's been the right decision, because, it's kind of worked out very well for us as a business.
Okay, what does a long-term investor look for? A long-term investor would not log into the app or the platform every day and look for the investments or change in portfolio. I mean, probably the beginners would for some time, but then after a while, they won't. So what is it that they are looking for in a broking platform?
Yeah, so today, I think, for the really long-term investor, I think, I mean, apart from the fact that we are zero brokerage for equity investing, so there is no cost, and we offer a decent experience in terms of trading. I think we also have kind of solved for this whole taxation, like tax P&L, so for what long-term investors require, right? Because they're not coming to the platform daily or monthly. Now they might come once in a quarter, whatever. So for them, the pain point is really, one is cost, and two is, this being able to file your taxes very efficiently, like we have a tax loss harvesting report, for example, which is very beneficial for, investors of sorts. So we've kind of, kept it like that. I think one of the things that we are working on right now is around goals, where investor can set goals and, kind of allocate. So which means, because when you're investing, be it stocks, mutual funds, whatever, you probably have some goal in your mind, right? As in, this for my retirement, or this for my whatever, kids' marriage or education or whatever, right? So, so we're trying to kind of build on a goal-based experience within the app, so which can potentially get people to come back and look at the platform more frequently. But like you rightly said, today investors don't use it as frequently, and which is okay. So we never, as a business, we have never pushed people to come use our platform, and we have never sent out push notifications saying, log in and check this or trade this, or because as a business, the philosophy has always been, don't do to others what you don't want done to you. So I hate push notifications on my mobile from random apps. So consciously we've said we're not going to do it to our customers. So, and we're okay. I mean, customers, if he wants to track his portfolio, he'll come to us. If he doesn't want to track, he'll not come. So you can't really force that behavior of sorts.
About zero brokerage, if the customer is not paying any brokerage to Zerodha, then what is the customer paying?
Yeah. So the thing is, in equity investing, what happens is there is no risk we take on every trade. Like, like every customer brings in 100 rupees and buys 100 rupees of stock. So he's already committed money up front, right? But that's not how it works with our intraday and FNO trades, right? Because in intraday and FNO trades, customers are trading with a leverage. So, with 10 rupees, they're probably buying something worth 50 rupees. So they potentially can lose more than 10 rupees. So it is the whole concept of going zero brokerage was that because we don't take any risks, we can afford to kind of do it at zero brokerage, and the active traders kind of subsidize, the investor. But we do charge an AMC charge. So we have a 300 rupees per year annual maintenance charge for all our active demat accounts. So we have some earning from there, but generally the business today generates revenue from traders, and they tend to subsidize the investors of sorts.
Just one more point from this conversation. You mentioned about tax loss harvesting. Could you just talk about that for 1 more minute for our viewers to understand better?
Got it. Yeah. So the thing is, every year when you're filing your returns, on your realized profits, you have to pay tax, right? As in, it's a 15% short-term capital gain or 10% long-term above 1 lakh rupees, right? Now, the thing is, assuming you have some stocks in your portfolio which are in unrealized loss, right? So tax loss harvesting is essentially selling your stocks which are unrealized and reducing your taxes for the year. Like, if say I had made 1 lakh rupees of short-term capital gain this year, so I have to pay 15,000 rupees as tax on that. Now, if I had, if I have 5 stocks in my portfolio on which I'm sitting on 1 lakh rupees of notional losses, I can book the loss, and then buy the stock back again. When I book the loss, I've booked this 1 lakh rupee loss. So, net, I don't have to pay taxes this year, right? But there is, when you're doing tax loss harvesting, the thing is, in India, that regulation is not there, but in the US, there is a regulation called as wash sale, where if you do it and buy the stock back again within 30 days, they say that you cannot set it off against your gains, right? But in India, currently there is no such regulation, but you never know. I mean, eventually.
Till the time the regulation is there, it can be used.
It can be done, and the better way to do it is, you wait for a bit and then buy back, and you don't do it the same like a next day itself or something like that.
Of course. Of course. And this has nothing to do with setting your losses against your regular salary income, right?
Correct. Yeah. So for that, so we have a lot of content on that in our in our varsity, the education piece. So yeah, so you cannot set off your business losses. I mean, so the thing is, your stock market, active trading and active investing, you can potentially show it as a business gain and loss. But a business gain and loss cannot be set off against salary income,
yes,
right? But you can set it off against your interest income. You can set it off against your rental income, right? So if you have made losses and you're a salaried person and you have an interest income of X amount, you can set it off against it. But for that, you have to show you have to file a return like you're a business, so you cannot show, you cannot do it without filing your ITR 3 of sorts.
That's ITR 3 that you need to file. I hope the viewers take note of that. You mentioned about when the pandemic happened, a lot of people were sitting at home and they had savings to go with them. So that's why they jumped into trading. Is that the right mindset? I have some money lying around, let me try my hand at trading or investing, or should there be a proper plan?
No, I mean, of course, there should be a proper plan. I think, see, the thing is, almost historically across broking, for many decades, right? As in this is one of the oldest industries of sorts. Greed is usually the enabler, right? Greed is what creates activity, right? As in, so it wasn't just that people had time, they had money, but it is also because in 1 month, the stock market recovered very fast. So, it kind of fell and then it bounced back. So a lot of stock went from 50 rupees to 100 rupees in very quick time. And I think that greed is what generally got a lot of people interested, which is not, I mean, like I said, which is not a right thing. One of the problems that I've personally had, not just with this, also with, a lot of these social media influencers is, when if you need to set the expectations right, when people are, starting investing in the markets, people shouldn't come to the stock markets thinking they will double the money every year, or, they'll make 10% a month or whatever, right? Because it's almost impossible to make that kind of return. Of course, you can have short periods of time where you make it, but otherwise it's highly unlikely that you can make like a lot of money very quickly in the markets. Because when people come with the wrong expectations, they will get disappointed. If they get disappointed, they will never come back, which is not really good for anyone. I mean, it's not good for the brokers, it's not good for the influencers, not good for the exchanges and the entire in the country itself. So one of the things that we've constantly tried is to figure ways in which we can set the expectations right with the customer when he's onboarding. The most important thing is the expectation. Now, the second thing is, of course, the plan, right? Which is, once you start investing, it's not easy to make money investing in the markets, right? I mean, there's a lot of skill required, right? And but in a bull market, it seems very easy, right? As in that's really the problem. So we're also trying to constantly educate people that what is the right way to approach investing and trading, which is don't be concentrated in one or two stocks, or understand that there is a disposition bias which gets you to sell your winners, buy more of your losers, while you should be exactly doing the opposite of that when you're managing money, which is hold on to your winners and sell your losers, right?
Yeah, but then that's easier said than done. How to identify which one is winner? Apple stock was nowhere. It didn't move for nearly 20 years, and then after that it moved.
Yeah.
How long can you hold one stock?
Yeah, no, I mean, it's like I said, it's a lot of luck as well in this business. No, but what I'm saying is the basic rule. Say, assuming I have two stocks, I bought both at 100 rupees, stock A and stock B. Now, stock A went to 130 rupees and stock B went to 70 rupees, right? What are bias? I mean, all of us are physiologically, we have some biases towards, when it comes to money, right? When a stock becomes 130 and another stock becomes 70, and you hold both of it, instinctively you want to buy more of the stock at 70 because it feels cheaper to you, right? Because that's how we are wired, right? As in, when we go to a shopping mall, we see a sale, we see a discount, we want to buy that, right? But in the stock markets, the way to make money is not buying what is cheap. It's really to buy what seems expensive, because things that are expensive tends to become more expensive over time, right? Things which are cheap tends to become cheaper over time, right? Okay. And most people forget. I mean, can't kind of make peace with this different way in which the stock market works, right? Because otherwise, in real life, if Apple was at 50 rupees a kilo, at 80 rupees, at 30 rupees a kilo, it is a screaming buy, right? As in, you should probably buy more apples. But in the stock markets, if a stock was at 50 rupees and it came to 30 rupees, maybe it's an avoid, right? Or at best, even if you're buying, you should probably buy as little as possible, right? As in, so stock market is about that, right? It's about risk management and how you manage money, because where does a stock price go to? It's absolutely no control of yours, right? As in, it's almost impossible for anyone to predict which stock is going to go up, which stock is going to go down. But when you have a bunch of stocks in your portfolio, I think just understanding the money management is the second most important thing. Probably the first most important thing of investing and trading in the markets in this.
Okay. Generating alpha over the market. There are fund managers, experienced fund managers. There's a whole AMC industry, which is built around buying and selling of stocks. The best of the funds over the very long term have given 19 to 20% CAGR, which is very good, by the way, if you compare it with Nifty's 12 or 13%. But a lot of traders who are coming to the market right now, they are coming into it with the expectation of 40%, 50% CAGR, or even 100%. Is that doable?
No, like I said, it's impossible. As in, of course, you can be like this special guy who figures out the best stocks. I mean, but at least with all the information that we have, all the data we have, very small audience, in decimal percentage are actually, can beat the index over the long term, right?
We are talking about beating the index, not beating the best of the fund managers, right?
Yeah, I'm talking best of the index. I mean, see, the thing is, people who trade with leverage, right, which is traders, intraday traders, futures and options traders, some of these guys have outperformance, like much better returns. But it's for them, it's very hard to scale that business. So, for example, a guy who has 1 lakh rupees trading, say, futures and option, could potentially be generating 1 lakh rupees a year, because he gets leverage, right? As in, he gets to trade with leverage. He's doing multiple trades, etc. But the trades that the ability to generate that 100% return diminishes as the capital keeps going up. So, if he has
Why is that?
because the opportunities available in the market changes based on the capital, right? As in, if you have 1 lakh rupees, you can buy and sell one lot of Nifty, say, calls and puts very easily. But if you had 1 crore and you had to do the same with 100 lots of Nifty calls and puts, your impact cost increases, your, opportunities, you don't, as money becomes more, you would probably not take as many shots at as many opportunities that you would take with a smaller capital, right? So a lot of people that I've seen and a lot of traders who do very well with small amounts of capital, they start choking when the capital becomes larger, because they're trading, what made you money with lesser amounts of money the same strategy doesn't really work if you kind of, have larger amounts of money. But the thing is, in all of this, very active retail traders have a huge edge over fund managers, right? The reason they have a huge edge is because, assume I'm a fund manager and today I'm bearish about the markets, right? I cannot sell my portfolio, right? As in, because regulations say that you cannot sell your, you can't be holding more than 15-20% cash, so that means I'm forced to be almost always constantly being long, right? But if I'm a retail trader, I have 1 lakh rupees of stock and I feel, the next 1 month is going to be bad, I can exit it in like 1 second, So the retail traders have an edge over larger traders and fund managers, which is you can be very nimble. So, you can kind of enter, exit at will of sorts, which is not really possible even for, like really large HNI trader. If I had, say, 100 crores worth of a mid-cap stock and I want to exit, I cannot exit today, right? Because, if I come to the market, try to sell, the stock price will tank 10, 20, 30% in no time at all. So
and then SEBI will be after you.
I mean, not really. I mean, there is no regulation that bars someone from selling, just because the price is going down. But I think retail traders need to understand the edge they have. I mean, of course, if I am a fund manager, maybe I have access to better research reports, more information on the company, etc., which is an edge there. So, as a retail trader, you need to play to your advantages of sorts. But coming back to your question, I think to consistently make like 20-25% and over every year in the long run is very hard in the markets, and very, very few people, I would say, maybe I'm just putting a number, maybe 0.1% of all the people can really beat like that 15-20% return in the long run of sorts.
Actually, even 15 and 20 is a very wide range. So that's 15 and 20 is a difference between winning and losing.
Correct. Yeah. No, I mean, the thing is, so there are the equity investor only crowd, right? For them, it's a large difference, right? But the very active trading crowd, they are probably up and down, 15-20%
Yes.
in a month, So, but if you're an active equity investor, then, who only invests, buys stock and sells stocks, then 15-20% itself is a wide range, and making that 15% also is quite hard in the markets.
The new generation of stock market participants which have entered in the last couple of years, especially during the pandemic, they haven't seen the kind of correction phases that have been there in the markets earlier. Okay, first let's talk about investors. What do you want to say to the investors who may be in for a rough ride going forward, and there will be corrections sometime sooner or later?
I mean, we saw a little bit of it in June, right? May, June. I mean, you saw, not really much. I mean, but still, there was some, like initial, like what a 10% fall in the market seems like, right? And we saw the trading activity drop like 30-40%, right? So it is like I said, I think it's just a given that one of these days we'll be in a 20-30% correction. And my guess is that people will become inactive, because usually when suddenly prices fall, most people freeze of sorts, they postpone their, kind of trading decisions. So I think for investors, the idea is, see, the good bit about the last 2-3 years is most people who have entered the markets are young, right? Now they're less than 30 years of age. So they have a lot of human capital and they've invested very little amounts of money, right? So if I am, say, 25 years of age and I've invested 50,000 rupees and I earn 50,000 rupees a month, I've just put 1 month of my salary into the markets, right? So even if there's a drawdown, I don't think it'll really affect sentiment of sorts, because historically in India, what had happened was, all the previous bull markets, most people used to come with the older lot, So if I'm 50 years of age and I have say 40 lakhs of my savings and I have brought it invested in the markets and markets fall, I'm gonna get scared, right? But the younger lot, because they have this age on their side and the capital is much lesser, I don't think a lot of people will really get affected if there was a big correction. Now, what do they do when there is a correction is the second thing, right? Would you just stop investing forever just because there was a correction? Or do you say, what, markets are like this, they go up and down, up and down. I need to keep putting small amounts of money consistently over long periods of time in good quality companies or, in a mutual fund, right? And that is something people, and have this goals, because I think today, the other thing that we're trying to educate youngsters is that the retirement ages are dropping significantly, right? As in, by the time today's 20-year-old is going to be 50-year-old, you don't know if you can really work from 50 to 60. Like today's retirement age is 60, but it could be 50 in 30 years from now, right? Which means people have to save enough for larger retirement periods, right? As in, and these are all things that we say. So for an investor, I think it's about doing it consistently, putting small amounts of money.
So that's what I wanted to ask. So instead of getting scared with the next correction, how to prepare for it and how to make the most out of it, how to use it to grow your wealth even a little faster. That's all I wanted to ask.
Right. Yeah. No, I mean, I think if you're a younger person, I think most of your capital allocation has to be equities, right? As in, because like I said earlier, you have to, at the end of say 30 years from now, if you're 25 and say, in 30 years from now, it'll be 55 and most likely would be forced to retire at 55. And the only way to be able to beat inflation over long periods of time is by investing in companies. And India is right now maybe in the center of the planet Earth, right? In terms of, we are one of the large democracies which has growth, etc. So I might be conflicted. I mean, we all might be conflicted, but India seems like a growth story, right? As in, like in the next 10, 20, 30 years, India seems like we'll become a super economic power. And we Indians need to kind of benefit from the upside, anything that India sees. So I think it's about not trying to time the market, because it's almost impossible to do it. And keep investing small amounts of money anytime there's an opportunity. And if you're a young Indian, I think you need to have as much exposure to equities. Now, if you're someone who doesn't enjoy investing and you're trying to pick stocks just for entertainment or greed and etc., I think at some point of time you need to kind of be honest to yourself and say, what, a fund manager can do a better job than me, or put it in an index fund, versus trying to pick single stocks of sorts, because picking single stocks is extremely complex, because while it can create a lot of wealth, but the problem is, you can keep getting swayed into whatever is the hot thing in the season, right? And then, one mistake, not the portfolio not allocated correctly, concentration, one mistake can take you back many years. So for people who don't, enjoy investing, don't enjoy the experience of investing or searching for companies, etc., I think the best bet is to find a good fund manager or, pick up an index fund and invest into it.
Is it also a good idea to buy option hedges along with your equity investments?
Not really. I mean, I don't think, investors should really get into options at all, because options are extremely complex. Right? Options trading, I think, should be for only people.
I mean, simply buying put options to just cover
that loses money. I mean, simply buying put options every month, historically has lost money because put options expire. It's like, like a term insurance that you're buying every month, right? As in, and the premium is so high that it doesn't add up. So historically, buying put every month has been a losing strategy, on a portfolio. So I don't think that really makes too much sense. But yeah, but if someone is, clued into what is markets and is understands the nuances of futures and options, of course, kind of gives you an opportunity to kind of give that additional return on your capital, like covered calls, for example. If you're into a company which is not doing anything phenomenal, like ITC, for example, you have sat on it and keep writing calls on it and keep earning money for many, many years of sorts, right? So but yeah, but I think generally majority of the people should stay away from futures and options.
Why do traders get scared if the markets fall? Because traders make money either way, either markets fall or rise.
Yeah, no, I think the big problem for very active traders are generally they have too much skin in the game, as in they're normally very leveraged, right? As in, and when there is too much at stake, you tend to panic, right? I mean, that's really how we are physiologically, right? As in, I think one of the things that we've tried hard to explain to a lot of traders is to kind of reduce your leverage as little as possible. So if you have 10 lakh rupees, trade with maybe 50,000 rupees most of the time, right? Because, with 50,000, you're anyways getting a leverage of X amount, right? But most people are always trading with the entire 10 lakh rupees. Now, the problem is at every point of time, if the money that you can potentially lose is quite high, you tend to be constantly under fear and greed, influence of fear and greed. These are 2-3 observations, that we've also been trying to educate, which is, one is, if you're a very active trader, don't quit your job, etc., to do full-time trading unless you're profitable, doing part-time for a while, right? And because what happens is, if you have a secondary source of income, and trading is not the only way to put food on the table, your odds of winning is significantly higher. So for example, if I'm a salaried guy making 2 lakh rupees and say by the side I have 2 lakh rupees kept for trading, the odds of this person making money trading is much higher than a person who has 10 lakh rupees and who has to make a living out of trading every month, right? Because the person who's had to make a living of trading every month has to constantly think about making money every day or every month. So, and at the end of the day, trading is all about controlling your emotions, your biases. And, a lot of people constantly keep focusing about what is the next strategy, like this technical analysis and all these random things, but really the most important aspect of trading is money management and risk management, right? Understanding bet sizing, etc. So these are very basic fundamental rules that most people don't focus on. And when you're not focusing on that is when, trading is very fearful. It doesn't matter where the market is, going up, going down, staying flat. There'll always be traders complaining about, fear and greed.
What lies ahead for Zerodha? How do you see the platform evolving?
Yeah, no, I mean, see, we've done a decent job in terms of educating customers or simplifying the act of trading or investing, and reducing costs and all of that. But I think we still have a lot to do in terms of see, the reason we exist today is to help people do better with their money. Now the question we ask internally is, have we done enough to help people do better with their money? And the answer there is maybe no. I mean, in the sense, and there's a lot more to do there. So very bullish on this platform that we have internally. We call it Nudge, which is like a user experience layer on a trading app. A lot of nudges are pending to be launched. So each nudge is essentially a money mistake that will be pointed out by the platform, right? So for example, if you're buying too much of banking stock, can the platform tell you that, because it's too much of banking stock, probably you need to be diversified? Or if you're buying penny stock, tell you that penny stocks carry a lot of risk. Just be like that, like that friend who tells you the right things, even though he's annoying, who tells you the right things, like even maybe your parents as well, right? I mean, parents generally have, what is right for you in your mind, but a lot of time what parents tell you is, is quite annoying. And so Nudge, we are very bullish about, we think, India needs an advisory platform, like a advisory happening at scale. Because most of us haven't been taught finance in schools and colleges. We have all picked up, from friends and family. So there's a lot of bad behavior out there. So we think, if we can somehow, enable advisors, professional advisors, to be able to build a business. Advisors can in turn turn the customers professional in terms of money. So these are 2-3 big projects. But generally, also as a business, we are very closely tied in with how markets behave. So, right, as in if markets go up, we do well. If markets go down, whatever, we are like really high beta kind of a company. So I think as a business for us is also to find ways that, any large downturn in the economy or the markets doesn't affect the business as much, So managing risk is also a very key aspect of the business itself.
On the advisory part of it, any specific plans or any movement has been there?
Yeah, no, I mean, see, the thing is, the reason we haven't progressed there yet is because, in advisory, for me to be able to say advise you, I need to have all access to all your, financial data at least, right?
Sure.
Today, people are very hesitant to give it for whatever reasons. Also because, you might have 5 bank accounts, mutual funds in 10 different places. And so usually when the first step of asking advice is, okay, let me help make you a balance sheet and let's figure out where to go from there, right? A lot of advisors today can't even take that step because, there's a lot of friction there because there's nothing digital. And now with account aggregator framework out there and, SEBI also saying that, depositories will be on it. It could all be on a click of a button, right? Which means, I meet you and you say, you know what, before we do advice, can I build you a balance sheet of sorts? And you say, okay, and you click a button and then, we can potentially build it. So once you're over that friction point, what is the actual advice to be given is actually really simple, right? The biggest problem in advisory today is to be able to build a client profile of sorts. In like, who is this customer? What is his balance sheet like? What is his risk profile like, right? Now, the thing about risk profile is what you realize is it's very hard to figure a risk profile by asking a bunch of, objective questions. If markets goes down, what will you do with the stocks, right? I mean, a lot of people trying to do risk profiling ask this question. Makes no sense. I mean, I've done this for 25 years. If you ask me, Nithin, what will you do tomorrow? I'll say, I have no clue what I will do if markets were to go down, right? So a more, I think risk profiling requires like a close interaction with the customer. So now that account aggregator framework is there, we are very excited. As and when all the banks get on it, all the depositories get on it, we will definitely work on having something out there.
What about the broking industry with the advent of discount broking? Do you see any future for regular full service broking as well?
See, today, that whole discount regular has kind of that there is no gap of sort. Everyone is low cost today, because when we started the business, we were the only a flat low cost kind of a broker. Today, all brokers have kind of reduced their pricing model. I think when I mean, they may not be as low as us, but generally, the pricing difference has reduced significantly. I think what the traditional brokers kind of say, the pitch today is that, I'll give you research, I'll give you advice, etc. But I don't think today the advice is still holistic, right? I mean, sending a research report on what will Reliance do today is not really technically advice, for at least according to me, right? As in, or say, buy stock X above this price at the stop loss of this. I don't think that's advice, So, I mean, we could do it tomorrow morning, I mean, we've been trading the markets for so long, right? I mean, if I had to generate a bunch of stock tips and send it out to our customers, we could do it. But I think we'd be doing injustice if we did something like that. So,
why?
Because a customer doesn't take that tip and, he puts his own thinking to it, right? For example, if I tell you to buy a stock today, you might do it because I asked you to do it, but you'll not know what to do with it after you buy it, right? Because investing isn't just a a decision to get in, right? I think getting out is a lot more complex than getting in, right? And and also portfolio, like I said earlier, risk management and portfolio allocation is diversification is really the two very key aspects, right? Now, if I tell you to buy the stock, what if you bought 100% of your capital into this stock because you thought, Nithin said it, so it should make money, right? So to be able to control all of that is when you can truly, be offering a true kind of advisory as such. And I don't see any brokers doing it today, right? So I think traditional brokers over time will slowly keep reducing the prices, and eventually I think there'll be just one flat pricing across the industry. I mean, I don't think you can ask for a premium just because you're going to give some stock tips eventually. So but I think the other piece of the traditional broker of offering relationship managers, I don't think the newer tech companies can really catch up to that. For example, if you're someone who wants to talk to someone before placing every order, and if your traditional broker is offering it and charges you a premium for it, that's a value-added service. And I don't think a broker like us can really offer a service like that. And so I think there will be space for both. But unless the value proposition from traditional brokers is large enough to demand a higher fees, I think otherwise, I think the pricing will, the US, if you see, right, there were like discount, full service, etc. But it started in 95. Today they're all at almost the same pricing. There is no real difference of sorts. So.
Very quickly, how much should be the US stocks or overseas stocks be part of one's portfolio today?
Yeah, I mean, how much is again?
Okay, let me rephrase it. You said about India growth story. The same holds true for the US stocks as well. Warren Buffett himself has said it so many times. He believes in America's growth. Several words that he uses. So why should I not invest in US stocks instead of investing?
Of course. I mean, I think you could have exposure to global stocks, but do you want to do single stock investing in the US, or you want to just believe that US as a country is going to do well, so I need allocation to US, so buy an index fund, right? I mean, you could do that, as in you can have some allocation to international, like if you think Europe is going to do well in the next 10 years, you could have a European basket, which is go buy an index fund in Europe. Even Warren Buffett himself, I mean, is a proponent of passives, right? As in the sense, right? So it's very hard to pick single stock in the US because, if you think India is complex, US is infinitely more complex because the number of stocks are so much more, right? As in, the universe of companies that are listed in the US is a lot larger. So I think, but index investing makes sense. I mean, to have some small exposure to other countries, continents.
Okay, let me just ask it once again. Yeah. Will India markets do better or US markets do better than one another in next 10 years? Which one?
No, I mean, like I said, I'm conflicted, giving this answer, but I think India is positioned to do well as a country because we are one of the last few countries where there is growth available. There is a stable government. There is the right demographics of people. Like we are the highest number of 20 to 30-year-olds. So given all these 3-4 things, unless there is some global event, that doesn't derail us, I have a feeling that in 10 years from now we will on that GDP per capita ladder we would have climbed up significantly, and if the GDP per capita kind of goes up, I think we as a country and our companies will do much better as well. So for that reason, I think yeah, I would put my money. I mean, I'm already invested completely in India, so all my money is on India.
So you don't have any money in US stocks, is it?
I mean, a small amount. I mean, like maybe 0.1% or lesser. I mean,
so that's hardly anything.
That's hardly anything.
Zerodha has recently launched a fitness challenge for employees. Okay. What's the story behind that?
Actually, this is not the new one. This is our 3rd edition. Okay. So what happened was, once COVID hit and we started working from home, we kind of realized that everyone needed a nudge to be thinking about fitness and health, right? Because see, a physical, coming to office is a physical activity. So you tend to, you get up, you have a shower, you catch a whatever transport. I mean, all of that time, your body is actually moving, right? But this whole work from home, what happened was people stopped moving, right? As in they were all sitting mostly during the day. And so we started in 2020. Like the first challenge was people could set whatever health goals they wanted, and if they met it, we had this thing saying, we'll give some bonus, like a half-month salary, and then we'll do a lucky draw. The lucky draw was, was like a kicker, which is, like a large outcome tends to create a lot more interest in people. So, very successful, a lot of transformations. People lost 20 kilos, 30 kilos. I mean, and it was all set on their own will, in the sense we didn't nudge. Last year, we had this BMI challenge, which I got a little trolled for because it probably, I didn't word it right when we had announced it. But, everyone internally in the office knew what it is. So we said, anyone, if anyone who's less than 25 BMI, gets, like a month's salary as bonus, and if we as a team, our BMI reduces, everyone gets half a month's salary bonus. So, and of course, there was always a lucky draw because lucky draw creates, like the lottery aspect creates a lot of interest, so, but I think the BMI thing, looking back was maybe not a right thing, because some people, because of their bone structure, find it harder, to be at that 25 BMI and lesser. So we made changes internally after that. So yeah, so the thing about the first 2 challenges was there wasn't enough accountability. right? So this time we said, how about we ask people to set any activity goal, and people who have activity trackers, they have it. If they don't have it, we gift it to them. So so they were an activity tracker, and it's up to them. They can set whatever goal. But the idea is, can you kind of bring accountability to be able to move during the day, right? If you move during the day, if you walk after lunch, you do something, you will get to 300, 350 calories. I mean, our expectation is, can we get everyone to at least be moving enough to be, like, I think if you're doing 6,000 to 7,000 steps, you would be at 350, 400 calories, right? But including your showers, you're going up and down, buying vegetable, all of that, you can easily get to 400, 450. But the idea was to nudge people to get to 450, for men and 350 for women. And yeah, so I mean, everyone internally is quite excited about it.
And are there results to see?
Yeah, I mean, like I said, over the last 2 years, from 2020, we've had phenomenal amount of transformations. Now, I've been wanting to share a pic of all the images of people who have transformed, like people who are overweight, who have lost weight, etc. And it's very exciting to know that, some like an intervention like this can make a difference. But the question is, how do you do it without like pressurizing people? People shouldn't feel that they're pressured to do it. People should do it because they should do it. And I mean, at the end of the day, really, health is more important than every aspect. And like I said earlier, we are all going to live much longer. So what we do between 30 to 50 will determine our lives beyond 50, So yes, we are constantly trying to nudge everyone within the team to just be more conscious about health and fitness.
So nudge is the word of the day, I think, both on Zerodha app and on the fitness.
No, yeah, I mean, we try. We've been trying all like different, like even for example, we have this varsity certification exams that we've started for college students. We're trying to see if we can nudge by saying, you'll get a certificate at the end of it. Will they be interested to sit through a certification program where they can learn, which is good for them. And we're doing it without any expectations. So there is no money that we are making in those varsity certifications.
Then why do it?
Because I think people need to learn finance before they start making the money. What happens is, once you start making the money, you're affected by greed, fear, and all of that.
I mean, what I'm asking is, why have you taken it upon yourself to do it when the education system itself has not thought about it?
No, I think we've done well as a business, and today we have the resources to do this. So it's a moral obligation to be able to do it. I mean, if we didn't attempt to make India more financially literate, I mean, there's no point of existing as well.
Nithin, it was a pleasure talking to you. Thank you so much for joining us today.
Yeah, thanks, Shaleen, for having me on this.